right, everyone, we want to welcome you back to another one of our Mortgage Minute segments here that we do every single month. Just to remind you, I'm here with Stacy Williams with Guild Mortgage. He is one of our preferred lenders and an absolute rock star in our world. We love working with him. Appreciate all he does for me personally and my team and for all of our clients. This is one of those great resources that we as a team have for ourselves and also for you, our friends and our clients. So Stacy, thank you so much for being with me today. Really appreciate it.
Yeah, of course, Katie, anytime. It's a pleasure working with you guys, obviously.
Well, we love it. We love it. So Stacy and I were having a conversation a little bit earlier because we usually do that before we jump into these segments. Is just kind of what do we want to talk about, what's important to our people, what's happening right now out in the marketplace. And so Stacy and I were talking about some of the interesting things that we're seeing happening in lending right now. So Stacy, first off, we've been talking about like historic low interest rates. You know, tell us kind of where we're floating right now, what you're seeing as far as interest rates go.
Oh my goodness, they're so low. It's in 15 years, first and foremost, I want to say that I've been around for a while. We haven't seen anything like this. You know, 30-year fixed rates on some of the government loan programs like FHA and VA. They're approaching 2.25% on a 30-year fixed mortgage. It's just absolutely unheard of. You know, if we think about a year ago, pretty much a year ago exactly, rates were like 3.625, 3.75.
Yeah.
So again, extremely low. And then if you look at the conventional loan programs, those rates are still 2.5%, 30-year fixed mortgage. It's unheard of.
Oh my gosh.
It's almost free money.
You guys.
Yeah.
Money.
Out of control.
Cheap.
Yeah.
I challenge you all to go and look at your credit card statements. See where your interest rate there is.
Yeah.
Just to blow your mind.
Yeah. And
Absolutely.
so, you know, with these low interest rates, you know, earlier when we were having another call, we were just talking about buying power with interest rates where they are. And like, you know, the average purchase price is right around 300, 320. And the difference in interest rates from last year to this year, the monthly payment's about $200 cheaper where rates are.
Oh,
so
but Stacy, tell them the savings over the period of the loan. That one blew my mind. Tell me that.
Oh, wow. Okay. So we have a system here where we can plug in, get some interest paid over time, how much the savings looks like. So, you know, last year when the interest rates were around 3.75 versus this year, you'd pay over $17,000 in interest in 5 years with a loan from last year, where this year it was going to be somewhere significantly lower. I don't even recall the exact number, but then over 30 years, I do know that number exactly. So on a 30-year mortgage at a rate of 3.625, and again, we're talking about a $300,000 price range, you'd pay just about $280,000 in interest over 30 years on that loan. So it is a big number and it's hard to swallow, but that is the case. Versus where rates are currently, you might pay somewhere around $200,000 in interest. So over 30 years, that's an $80,000 savings, which is pretty substantial. There's a lot of things we can do with that money over time and have it grow and work on your behalf.
Kids, listen to me. What could you do with $80,000?
Yeah.
What sort of Bentley could you buy with $80,000?
Or college fund or whatever it is. Yeah, totally. If you have kids.
Right? Yeah. So, oh my gosh. And last year, this time we were talking about historically low interest rates and how excited we were for those threes. So, yeah. Oh my gosh. So really quick, we're going to take a little derail and then we're going to come back around to this because I want to talk about this just a titch more. But one of the problems that I shouldn't call it a problem, it's not a problem. One of the challenges that we're seeing with our buying processes and stuff right now happens to be kind of along with this the appreciation that we're seeing in houses, money's so low, talk to me just a little bit about what you're seeing with appraisals.
Well, first and foremost, the lending process is taking a little bit longer, and part of the component is the appraisers and the time it's taking them to get out to see properties. And I think it's just an industry issue right now. You know, to give you a little statistic, the industry is probably built to handle about $2 trillion worth of mortgage business. And right now we're experiencing about $4 trillion. So double what most companies are staffed to handle.
Right.
So it's putting a lot of pressure on everybody from your real estate agents to your appraisers, to your home inspectors, to your lenders. Everybody is working at max capacity to get through the process. And so it's taking a little longer, maybe plan on 30, 40 days. We used to be able to say, hey, we can close in 3 weeks, no problem. But now we're asking for 40 days if possible. Yeah.
Yeah.
And also with the appreciation, values are going up pretty significantly. And I don't know the statistic, but I think it was somewhat on 11% this year for Maricopa County.
Yeah.
Something like that.
Over 11% for Maricopa County annually here so far. Mm-hmm.
Yeah. So obviously we have a lot of appreciation and values going up. And what was I the appraisers, because of this appreciation, I don't think appraisers have necessarily caught up to that. And so sometimes some of the appraisers are giving us the value for what you're paying for the house. And that's not because the value is not there. That just means the data is not on the books yet that they could use to actually give the value.
Yeah.
The value is what somebody's willing to pay, essentially.
Yeah. So this is just a quick little tip for all of those of you who are not actually working with me or someone on my team. A, you might want to come and talk to us, but B, talk to your agent about what do you do if the appraisal comes in low, both on the listing side and on the buyer side. What are the options? What happens? What do we do about that? So that's a whole conversation in and of itself. So we'll maybe circle around to that a different time. But I wanted to get back over to these amazing things that are happening in lending with the values and the interest rates and all that kind of stuff. So let's just talk about opportunity right now, Stacy, because I was listening to something earlier today and that word just like crystallized in my brain, opportunity, and what an amazing opportunity we are in right now. So let's just talk about that. From a lending perspective, I mean, I can talk all day from a selling perspective or from a buyer's perspective, but from a lending perspective, what opportunities are you seeing for both home buyers? I don't care if they're first time, I don't care if they're fifth time, but home buyers, and then also for those people who want to stay in their home for the refinancers. Let's talk about both of those real quick. So home buyers, what opportunities are you seeing out there for them?
Well, other than the fact the cost of money is so low right now, that's probably the number one driving factor, I would think, is a reason to get out and purchase a home if you're in a position to do so. Beyond that, there's different loan programs out there. When we talk about opportunity, minimal down payment requirements, 3% to 5%, depending on the loan program, but we also have down payment assistance. And those down payment assistance programs through Maricopa County help bridge the gap. If you have your job and you have the income and you have the credit score, but you're just lacking the down payment, there are programs in place that can help get you there.
Yeah.
And some of these programs, the interest rates on these down payment assistance programs, depending on which one you go with, you can get a really, really aggressive interest rate. And one of the important things that we might be going deep here, but somebody with a mediocre credit profile who's in a position to buy, well, they might have a higher interest rate if they didn't utilize down payment assistance. So sometimes they could even get a better interest rate by using the program than they would have otherwise.
Yeah.
So that's really good.
Yeah. So people, those zero down payment loans are not gone. They maybe don't have the lowest interest rates, but again, they're so low right now that they look really, really good. But so yeah, talk with your lender to figure out which kind of program is going to work for you. So for certain.
Absolutely. Yeah.
And Stacy, you and I are working with a client right now that 8 months ago, pre-COVID, when we were talking with them about their purchasing power versus now that these interest rates have dropped even more, we've seen their purchasing power increase. Nothing in their world has changed necessarily, except for the interest rates have dropped. And so they're now qualified to purchase more money. And they're comfortable with that higher purchase price because the monthly payment has either not changed or gone down.
Yeah, very similar. So again, buying power, right? It has gone up just with the rates dropping. So she's in a really good position and time has been on her side. Yeah,
it's been to her benefit. So yeah, it's been wonderful. Okay, so now let's switch gears and talk a little bit about those people who want to stay in their homes and the refinancing opportunities that they have right now. So I know part of what has just swamped the lending industry over the past several months is not just home buyers, but this tsunami of refis that have come flooding at you. So let's talk about that for just a half a second.
That's a great word, tsunami. It really feels that way. It has been unbelievable. But, obviously rates, again, we go back to rates being so low. Even if you bought your house at the beginning of the year, we have clients that have benefited significantly from the refi because of the rates on one hand, but also appreciation. So look, they may have purchased and they may have put 5% down or 10% down. Well, with appreciation rates as well as lower interest rates, we can help remove mortgage insurance potentially, as well as get them a better monthly payment. So, I think there's the old adage out there that say, hey, if we can't drop our interest rate 1%, it's not worth exploring. I don't buy into that at all. I think it's worth the conversation. I think where things are, as well as the appreciation, your savings could be pretty significant.
Yeah. So, and I love that you threw in there, even if you purchased it earlier this year, it's still worth looking at. If you're in the 3s or 4s for interest rates, it's worth looking at.
Without a doubt.
Without a doubt. Yeah. So, okay. I love that. I have personal stories, personal friend stories where I literally, people have been in their homes for 2-3 years. They're refinancing, they're getting rid of their PMI. They're actually even pulling money out to pay off debt, and their monthly payment is still going down. I mean, really?
It sounds too good to be true, but it's really not.
Well, and you know what, that is one of those things where it just goes to show that home ownership is that beginning block to personal wealth. And I am such a firm believer in that. It's just such a great thing. And so I know that it's real trendy to say right now, you don't want to own a home, you just want to rent, you want somebody else to take care of it. That, there's lots of trendy people out there saying that right now. And I'm going to be a staunch voice in the opposition of that. So
absolutely. And here's an example, like if you bought a $200,000 house with our appreciation rates, your house would be worth $220,000.
Yeah.
So you'd have $20,000 in your pocket versus the rent that you had paid.
Yeah. I mean, ultimately somebody's getting rich off of real estate. So it's either you or your landlord.
True.
Which one do you want?
Yeah. Straightforward.
Yeah, absolutely. Well, Stacy, thank you so much for joining with me today for this conversation. You always, like I said, bring so much value into our world and into our clients' world and our friends' world. So thank you so much for always sharing your wisdom, your knowledge, and pouring into all of us like this. So Stacy, if somebody wants to talk to you, either about finding out if they are qualified to purchase a home or what they need to do to clean up their credit so that they can purchase a home, or even a refi of their current home, how is the best way for them to get a hold of you?
I would say give us a call. Our phone number, 480-454-5625. Again, 480-454-5625. You'll get a hold of us. We'll give you a complimentary analysis. If you you don't want to dive too deep, we just need to take a look at your mortgage statement. We don't have to put you through a full application or take a look at your credit, just to give you some ideas of how things look. If you're on the refinance side, if you're on the purchase side of things, we just probably need to have a conversation, see how far we can get without going through the application, or just give you some ideas of what things look like.
Perfect. That's amazing. And you guys, if you didn't catch Stacy's cell phone number, I absolutely always know how to get a hold of him. So reach out to me, or you can check out our website at www.living48realestate.com. And all the way over to the side, you go to the more, you drop down to our preferred vendors, and you will find Stacy under our lenders page on our preferred vendors. So you can find them a multitude of different ways. But again, we want to thank you guys for watching all the way to the end of this little video. Hope you have gotten some value out of it. If there's ever something that you want Stacy and I specifically to touch on, please don't hesitate to reach out to me, direct message, text, voicemail, however is easiest for you. But let me know, and we will absolutely have that conversation and share that information with you. So thanks everyone for watching. Stay safe, stay healthy, and we will catch you on our next Mortgage Minute video.